Hey, good morning. This is Mayor Valensky with Driving Markets. The usual caveat here, which is anything said in this piece is only an opinion only. It's for media publication, and I'm not a financial advisor, not an investment advisor. Anything said, you make money, great. You lose money, commiserations. Let's get move on. So the thing I want to focus on today is the 10-year Treasury and the 2-year Treasury in the United States. Now, what normally happens is that the yield, which is the return on your money, the interest rate that you get on a 10-year should be higher than the interest you get on a 2-year, but it's actually inverted. I've mentioned this before, already happened back in May, where the inversion, where the 2-year yield, the 2-year return on money, the 2-year interest rate is higher than the 10-year, and that is a lead indicator on recession. Now, we're not talking about just a small slight inversion. We're talking about a major inversion of more than 51 pips, 51 basis points. That is a massive inversion, and that is going to indicate and going to lead us and direct us into a recession. Also, the German bond, the Bundesbond, the Bund, is also inverted. The 2-year is higher than the 10-year, another lead indicator into recession. Now, you can't avoid these lead indicators. You can't ignore them because they've been around for donkey's years. And when they occur, then inevitably the economy does go down. And whatever any politician says or economists say, most economists will agree that this is a lead indicator. So we have to be aware of that. And the spread, the difference between the 2-year and the 10-year is so significant that we're either in a recession or on the brink of going into a serious recession. Now, why is that important? Because the 10-year Treasury is the guide as to what interest rates are in the market. It's running at the moment at 4%, 3.7%, and the 2-year Treasury is running at 4.11%, and that gives you an indication where money is at in the financial markets. Now, you have to understand that the Nasdaq and all the high-tech stocks and all the startups and all the SPACs, they're all dependent on funding, and that funding is getting more expensive, and therefore investors are now reluctant to pour money into these high-risk, high-tech stocks, because the likelihood is that not only are they losing money, but they're likely to lose money going forward. So the Nasdaq, as a measure, as an index of the financial high-techs, is likely to go down significantly over the next few months, more than it's been down. People are talking about we've experienced a crash. This is not a crash. This is just a 10% or 15% fall. What we're looking at here is a 25 to 30% fall in financial markets, and they will follow on with a 25%, 30% fall in property. Property lags financial markets by around about 12 months. Property is at an all-time high. Everyone's saying, no, property's not going to fall. Well, as rates rise, property will fall because it gets more expensive, number one, to buy, and number two, to maintain. Not only that, rentals that tenants are paying just can't afford to pay those rents, and when rents aren't being paid, the landlord can't afford to pay his mortgage. So it's going to have a complete ongoing cycle. So where do you looking to trade? If you're looking to trade, you're looking to trade short. Trade short on the semiconductors, the Nvidias of this world, for example, are in a serious problem. Facebook, as I mentioned over and over again, has got big problems. Amazon's got big problems. Bed, Bathroom and Beyond in the States got big problems. The banks are going to also have an increase in their debt allowance. So banks could be in a rising interest rate market. Normally they're attractive, but you've got to look at where the debt is regarding the individual banks. So are there any defaults? Also look at selling things like Netflix and Apple. They're also a sell at this stage. Gold. Now, if it's a recession, gold will go down because the prospective use of gold is lower than be normal. Gold can go down, but in crisis, gold will go up. Oil also is floating out the $83, $84 barrel. I've been calling above $100 for a while. If we go into recession, you could see oil also fall. In other words, all asset classes will fall if we go into recession. That's globally accepted that we're in a recession. At the moment, the market's on the way down. As far as cryptos are concerned, Bitcoin is a massive sell. It's just not going to go anywhere, and it's going to float all the way down, it's going to sink down to around about the 10,000, with Ethereum going down to about $500. This is Mayor Valensky with Driving Markets. I want to wish all our Jewish viewers and Jewish listeners a Happy New Year, which is on Sunday evening. Should have a Happy New Year and a blessed New Year. Should have as many God-fulfilled promises and wants as you desire. And that's for our Jewish customers. Everyone else have a happy weekend. There'll be no driving markets on Monday and Tuesday due to the Jewish New Year. Good Shabbos, Shabbat Shalom, all the best.